Hello, welcome back to a weekly market recap with Knight this week. Let's get to it. So this past week, we saw the S&P 500 down 0.21%, brings us down year to date 13.49%. In the NASDAQ, we saw the composite down 1.54%, which brings us down year to date 22.38%. Really just a lot of pain. We've now had 5 weeks in a row of being down ever since basically the beginning of April. So the biggest catalysts this week were obviously the Fed. They raised interest rates 0.5%. And we also got the jobs report data on Friday. So those were the two biggest economic catalysts. And let's get into the week and what the market showed us. So we started off this week actually falling a little bit, then recovering significantly. Now, after the Fed spoke on Wednesday, we actually saw this massive rise, which was really exciting. And I think people were hoping that after the Fed meeting back in March, we got a 2 to 3 week really strong rally after that news. Well, on Wednesday, it looked like we were going to start that rally potentially and move up. However, Thursday, we sold off all the gains that we had, ended up hitting a new low on Friday, and then pretty choppy for the rest of the day. We did rise at the end of the week into the close, but still significantly off where we have been. And again, if we just scroll out even a little bit, we see, where we were even at the end of March compared to where we've been now. So let's talk about exactly what the Fed said. Obviously, the bad news of what the Fed did, they raised interest rates 0.5%. They basically said, hey, look, we feel like we're behind the curve. Anything under 2%, we are still stimulating. We want to get interest rates above 2%, 2 to 2.5%. We need to get there. And in order to get there, we want to front load with higher interest rate hikes, so 50 basis points, maybe subsequent terms, and then we can back off and assess where the data is. So that was the bad news. The good news is, in many ways, what Powell said. He said, look, I still think that there's a good chance that we can do a soft landing, that we can see core inflation start to peak. We think we might have seen the peak in March, but we don't know for certain. Thus, we want to keep raising interest rates heavily now, and then hopefully the data will prove that we have seen the worst of inflation, at least core inflation, and then the rest of it will start to work itself out, and we can adjust where we are with interest rates after the next 3 significant hikes. That is actually pretty positive news, saying that Powell still thinks that they could do a soft landing. Now, at first, it looked like the market believed what he said, was excited about what he said, and then just lost potentially all faith in the Fed that they can actually do this soft landing. The other important highlights from that meeting were 75 basis points is off the table. So they're not even going to consider doing that for the next couple times. They really want to stick to 50 basis point. So the worst case scenario is not necessarily there for the Fed, and that was positive. Besides that, there were a few other moments that were some positivity. The other big news on Friday came out the jobs report, and again, pretty positive. So we added more jobs. Now, the downside is the participation rate missed. So we actually don't have as many active participants, but the biggest and most important thing, inflation or wage inflation was at 3.6% annualized, which is well below. And again, the biggest fear that the market had was this wage price spiral of wages being above inflation and then that helping to inflation rise more. So we're not seeing that, which is a really big positive, but the market still sold off significantly. So we are at all-time lows for this year. We are still hitting new lows, and it's hard to understand completely where we are in this market. There are some that are really afraid that we're about to be in a recession. We are in a recession, and that for that reason, people should be fleeing stocks. Every single rally that we've seen in the market, we see a pretty significant selling pressure afterwards. We've seen that most of the year, and it makes it seem like people are wanting to get out of the stock market, at least in the short term, saying, look, I've had enough of this stress. I want to leave, and I will come back when all this mess has been taken care of. So that overall pressure and feeling definitely puts a lot of more selling pressure than normal into the market. And I think we've been seeing that in these rallies and why these rallies haven't really been lasting. So let's look forward. Next week, we have a really big CPI reading, and hopefully we continue to see core come down, core inflation. We're really hopeful for that. If it's not, we could continue to see this sort of pain. Right now, a really important thing is high quality. So whether or not we are in a recession right now, which some people think we are, whether or not we're going to head into a recession, something that we've been talking about a lot internally is being in very high quality names, meaning we want to be in companies that are currently having profits, that have good balance sheets. Companies that aren't making money right now are really tough to be invested in. They're being sold off way more significantly than others. And again, if you have a bad earnings report like Etsy did of saying, hey, we don't think people are actually spending as much money, we don't know if we're going to grow anymore this year, you're getting punished significantly. We saw it with Netflix, a growth company that all of a sudden couldn't grow, a lot of pain. Saw it in Etsy. We've been seeing it across the board. So these really growthy stocks, when they don't prove that they can continue growing, seeing a lot of pain. Now, one thing that we do know is every moment like this, it feels really painful, and it's really hard to stay straight. You see your portfolio dropping, you see your net worth dropping. We do know this time will pass. There will be times where we get through all this pain and we're back in a bull market. Stocks are rising. Eventually we'll be back at all-time highs. But it's really, really hard, and it's really scary when you're seeing your portfolio drop, when you're seeing how it affects your entire financial foundation. And anyone who's feeling really scared, that's what we're here for. Give us a call, talk to us. We can look at you. We can talk through your plan, why we feel comfortable with where you are. But please give us a call. You're not alone in this. We're here to support you. Your money's here to support you. And hopefully we have some good news next week, and I'll be back ringing the bell saying how we're on our way off from these lows. But if not, again, we're looking at it, and we're here to support you all the way through it. Appreciate it, and see you guys again next week.